headlines? No. Okay. GameStop is once again soaring in price as Wall Street asks if we are about to see another series of meme stock short squeezes and the accompanying chaos that follows. Back in 2021, we saw traders make millions of dollars in GameStop, AMC, and other meme stocks. Is this happening again? What stocks do you have an eye on? I have a few strategies in mind on how you can profit from them and potentially impede all this chaos. So stick around while I share you my thoughts. Although before we start, if you want more videos simplifying breaking news like this, please hit that subscribe button right there. It helps the channel out a lot. Oh my god, guys, how did we get here? Going back to January of 2021, GameStop used to be the most shorted company on the market, with over 140% of its shares being sold short. When a stock is sold short, what does that mean? Time for finance info. Short selling is essentially a bet that a stock price will fall. When an investor shorts a stock, they borrow shares that they don't own. They sell them at a current market price and agree to buy them back later. For example, if a hedge fund believes GameStop will decline, it might sell the stock at $10 per share. If the price later falls to $5, the fund can buy the shares back at a lower price. Yep. And they return them to their lender and pocket that $5 difference as profit for fees, of course. However, if the stock moves in the opposite direction and rises to $15, the short seller is forced to buy the shares back at a higher price, locking in a loss. Ooh. The higher the stock goes, the larger that loss becomes, which is why short selling is really risky. GameStop is trading at $100 a share. Short sellers would have no choice but to buy back those shares they borrowed at this price. Not only that, but this of buying shares puts pressure on the stock, and then it shoots the price up. This is known as short squeeze and often happens when positive news come out about a heavily shorted company. But GameStop's situation was unique because more shares were sold short than existed on the market. Yeah, at 140%, as I said. And even less shares were liquid, guys. This is crazy. This made it literally impossible for every short seller to cover their position. They were cooked. Realizing this, a bunch of traders on Wall Street bets thought to themselves, what if we all bought the stock, sent the price up, and refused to sell to these short sellers? It would be literally impossible for these short sellers. They would be forced to cover their positions to all be able to buy enough shares of GameStop to cover the positions, leading to a theoretically infinite move up of the company's stock price. And with a market cap of $250 million at the time, this short squeeze wouldn't be too hard for a group of retail traders to trigger, right? In January of 2021, they did just that. As going back in history, GameStop rallied from pre-split price of $4 a share in the summer of 2020 up to a peak of just under $500 before a group of brokers, they said no, thereby ending the infinite loop. And yeah, this movement sent a clear message to the market overall. Like, retail traders have a real impact on securities, and this birthed the meme stock trend that we all know. And yes, we later had a bunch of other stocks such as AMC, Rocket Mortgage, and others that had a lot of rallies due to similar reasons. Even the entire metal of silver, they saw retail traders and rallies. It was a lot. And they even attempted to short squeeze, to trigger a short squeeze of this entire metal. In fact, these movements were so pronounced that hedge funds and other smart money started actually watching the retail crowd to see what was going on or what was going to rally next. And the market has actually operated like this ever since. It is well known at this point that hedge funds not only read, but they also post on Wall Street bets. And every now and then we see a random meme stock that suddenly rallies due to popularity online, especially GameStop, which seems to have some sudden spike every few months. It was only last year that Roaring Kitty, who's famous for his initial investment in GameStop, he caused the stock price to triple in value because of a single X post. making himself hundreds of millions of dollars in the process. So, why are we here? What on earth is happening? Is this happening again? Well, not quite. First off, GameStop only increased by 6% on the news of Michael Burry's purchase. Are we in 2008 again? Mr. Michael Burry isn't buying because he thinks there's a possibility for a short squeeze. No. He thinks the company has fundamentals that are strong enough and it will genuinely be a good investment. And it is, with trading at a 1 times its tangible book value and net asset value. We're seeing positive insider confidence too, with CEO Ryan Cohen buying over 1 million shares to increase his stake in the company. Interesting. It's time to lock in. Ever since 2021, investors have been treating meme stocks like GameStop as if they were radioactive. Fear over the inconsistency of retail traders' positions. Radioactive. And it causes a lot of major investors to write off a company as a potential investment. Because if you think about it, if you're a serious fund, you might have your investors a bit angry if you try to explain to them that you want to invest their savings into GameStop. Ooh. Do I think there is the possibility for another short squeeze on GameStop, specifically GameStop? I wouldn't count on one. Because as short sellers have seemingly learned their lesson compared to the 140% and the short interest too, only 16% of the company's share are short as of right now, guys. What I love about this story is the emphasis it places on unique approaching to value investing. And perhaps there are other stocks that are trading at discount to their fair value simply because of their stigma associated with the meme stocks. Personally, I'll be looking into the financials of other meme stocks to see if there are any hidden value within them. But beyond that, there's obviously still potential to trade these meme stock from a momentum perspective, if you really think about it. Assuming you know what you're doing, of course. GameStop was the first, it for real won't be the last meme stock. So keep an eye out there. It's not a bad idea to keep an eye closed on what's emerging in popularity on X. And try to get onto the front end of the adaptation curve and talk with the late majority, people who hop on a little bit late to the trend. I'm not a financial advisor though. Regardless, there's always potential in the market. If you can think critically and come up with better ideas and or maybe get ahead of the rest of the participants of the market, you are serving. Yeah, remember to subscribe if you want more videos simplifying breaking news like this. Thank you for watching.